Hello everyone and welcome back into Crypto's News, here where you get the deets for you of what is going on today, and we try to get back in the rhythm of the news after about 6 days where I haven't made a video. It's probably been the longest period I've gone without making videos since I started doing it, so I guess a necessary break, but I've been following what's been going on and just trying to stay in tune with all sorts of markets, because it is insane when you look even outside of the crypto space. When you look at serious talks about negative interest rates, that would mean that when you put money in the bank, instead of earning an interest like you do when you have a savings account, you actually lose money. The bank takes money from you. So why would you keep it in a bank? Solvency issues for the banks that are headed down the pipeline as we have serious stagflation where the economy is not growing. It's funny that they're talking about lowering interest rates while still showing us good economic numbers that look good because they pick and choose the numbers that look the best. But why do they want to move into this unconventional money policy period again, where they buy bonds on the long end of the curve, QE, if you will, and they talk about negative interest rates, where again, you get charged for keeping your money at the bank, or you take out a loan and they pay you to take a loan out? What kind of world is that? I don't know, but it doesn't sound like a very stable one, as this modern money theory just does not seem to be panning out so well. So we have to look at ways to protect ourselves, and to me, cryptos have been by far one of the best ways to do that outside of gold and silver. Because let's face it, if there was some sort of solar flare, or there was some sort of giant EMP high altitude bomb that took away electricity over the entire nation, wherever you're at, you'd probably want other ways to secure your money until, you can access the blockchain again. I'm sure that would be kicked right back up with the backups that are on so many different computers, including on satellites now and on deep underground. But you probably want to have some gold just in case while that whole disaster comes about. But to me, crypto are just the best potential to not only protect their wealth in the event of a bad disaster like that, but also to thrive possibly and come out as a holder of this brand new kind of money. So I'm excited to get back into it, guys. I felt like doing a live video. I know I can't afford a haircut, Mad Cow. I cannot afford a haircut, but whatever. I've just been trying to grow my hair out, brother, before I go completely bald, right? It's good to see you, Jizzy Mac, and everyone else who's joining us here on the Crypto Minute. It's a pleasure. So I've gone ahead and amassed some news. I think it's important that we follow things closely, because a lot could be coming to a head here, moving into uncharted territories around the world, and more people realizing they need a way out of that whole system, especially once these banks really show their cards. Why am I getting charged for keeping money at the bank? I don't get it. Yeah, me either. But I have crypto. Thanks, Balu. Shout out to Aaron, who I met in Gainesville Airport, and he shouted out that shirt. He's like, "Cool shirt, man." And I was like, "Oh yeah, thanks, man. I'm a big believer, be your own bank." And the guy was like, "Oh, Omar?" And I was like, "Yeah." And he's like, "Dude, I watch your channel all the time, man. I recognize you by your voice." It's really humbling to see that there are people out there still fighting the good fight and who are big believers in be your own bank. And whenever I wear this shirt, honestly, I have people commenting on it, and it opens up a conversation. I was talking to another gentleman who remarked on it, who owns a website called byolender.com, and he was talking about how he wanted to pick up BYOB. He also he was like, "Why? I don't understand. Why would you want to hold this cryptocurrency stuff? Or what is this uncorrelated assets?" And I said, "Well, it's not just about like trying to circumvent people. It's not about trying to hide your financial transactions necessarily because you're trying to do a crime, right? It's because you don't want your money to be confiscated, and that's a big thing with Bitcoin. I can hold the keys in my head. Can't really confiscate that, even with a lobotomy. And so that can even protect you in all sorts of situations, such as, I don't know, you didn't pay your car registration and they threatened to take your money. They can't take your Bitcoin if it's in your head. During a divorce, a lot of people go through troublesome divorces. I know it's a subject people don't want to talk about, especially if you're in love with your partner. But, divorces have caused people a lot of heartache, and your money can be seized. So you keep some in Bitcoin on the side. It's about being unconfiscatable. But yeah, I love this shirt for that reason. Anyway, let's go ahead. Tomorrow they'll understand. Yes, yes. Hey, Matt, welcome. Let's go ahead and get started here with what's going on with the news after a bit of a rant here. I just had so many thoughts over the last few days. But anyway, what we're seeing right now is Bitcoin had a nice run up. A lot of shorters got wrecked. Litecoin has been a big mover. That's partly the reason that we've had a little bit of a pullback of 1.47%. But to me, that's one of the best vehicles that I'm seeing over the next few months because of the halving coming up in August for Litecoin. So leading into that, I've been saying I expect Litecoin to do really well, and that's going to be one of my bigger plays before next year's halving for Bitcoin, obviously, and Ethereum's release after that. These are some of the big names that I'm waiting for, but Litecoin being one of the biggest sure bets, if there's such thing as a sure bet, that I'm seeing if the market manages to stay afloat over the next couple of months. But again, it's been doing really well, so I'm personally not feeling too much fear and concern, but it's always best to trade safely, of course. Reminder, take your funds off of an exchange because in the event that we move into a bull market, it gets really difficult to access websites like Coinbase, like Binance, because even though they've increased their server flow, how much is enough when a lot of people are screaming to get in the doors? You might not get access to your funds. Support tickets might not get answered, and you're stuck. Your funds could get stuck in limbo. So it's usually best to be in a hardware wallet. Yeah, I'm just gonna pull one out. This is the Ledger Nano X. This is an option. I like Ledger, Trezor, whatever you want to do. These are great ways to secure your stuff, and you really need to be on top of that, especially in a world where regulations are constantly changing. We're going to talk about a serious one that's being discussed right now that could affect the way that you keep your crypto, especially if you're doing it on exchanges. You don't want to get hacked. Just please be careful, guys, moving into this period. And just a reminder, if you're keeping your funds on an exchange, they do not belong to you. Grin coin is up today. I can't really find a real reason as to why Grin is up, but we have a few privacy coins that are up, including Zcoin. Zcash was up a little bit earlier as one of the biggest movers. Interestingly, even after a $2 million, no, actually, I think it's more than that, a huge lawsuit that's coming at Zcash because one of the investors apparently isn't getting the shares he was promised. 170,000 shares or like that. Grin, you know, has a huge inflation rate. It's meant to be used as a currency, so I would be careful holding it as a speculative asset. It's meant to be moved. That's why it has such a high inflation rate, but it's one of the big movers today. Bitcoin, again, I think this kind of exemplified in the short term, some stuff to look out for. Josh Rager on Twitter. BTC price action. BTC just broke above the previous 2-week resistance as we had a nice little pop overnight, testing the 8200s, but currently is being held down at the top of the channel. If BTC can break this channel, you can see that downward moving channel here. It's heading at least to 8,550 with eyes on $8,700 and above. So we are at kind of a key point here. We still haven't broken above it. Again, we're at about 8,103. We can hold steady here, maybe climb over 8,200. We could see a quick pop to the upside yet again, although the RSIs and the relative strength index are pointing that we might have some short-term downside risk here. And you have to be careful here. If we close below that $7,600 level-ish, then we could see more room to the downside. We've held this high for so long, so maybe we'll continue to climb, right, and wreck those shorters. It's dangerous to short in a bull market. Very dangerous. You can see here a lot of shorts got wrecked. Right now the longs are winning on both Bitfinex and BitMEX, where on BitMEX, which some might say might be a more transparent and better indicator of the actual number of shorts and longs versus something like Bitfinex. And I'm not going to get into why right now, but anyway, we're seeing that the longs on BitMEX are at 63.53%, while the shorts are 36.47%. It's the same for Ethereum as well. The longs are definitely winning. Sometimes it's nice to play the contrarian here because a huge whale that decides they want to wreck all the longs and sells a huge amount of Bitcoin, as we've seen and you've seen many times in the past, could easily sweep away many longs. And there's more money in the short term for these whales to make to the downside. So something to consider there. Apparently this guy seems to have committed suicide. There was a trader who was like a renowned trader. He'd be calling out his trades on Telegram. Everyone kind of hailed him as a trading genius. This dude lost over 2,000 Bitcoin in one trade after a 100x 100x short position where he expected Bitcoin recently to drop to 7K. And it looks like in a matter of seconds, he got completely wiped out, losing millions of dollars, and committed suicide afterwards, as was reported, as you can see here, by his partner Jasmine on social media. It's a Chinese currency data analysis firm, which this gentleman who supposedly committed suicide had kind of headed up, and is no longer around for. So his name is Hua Yi, and he is suspected apparently of embezzling the 2,000 Bitcoin, or $15.6 million. Some are speculating that he didn't actually kill himself, that it might be similar to the Quadriga exchange scandal that happened a few months ago, where did he really die or did he not die? Is he trying to escape maybe some sort of financial troubles or get away with investors' money? It's really hard to say at this point. But I do remind people the dangers of trying to leverage, especially to the short side, in what could be a bull market. We have had 50-day exponential moving averages cross over the 200-day exponential moving average, which is a golden cross, which kind of means that we're in a bull market. So it's dangerous to try to do these things. I don't necessarily recommend leverage trading at all, but I mean, it can lead to suicides. And as you can see here in this article, it's not the first time that people have committed suicide over bad trades in crypto. There are numerous reports on Reddit. A Russian crypto trader last year in May took his own life after he was robbed of $500,000 worth of crypto. And so on and so forth. So I don't want you guys to do that, but you know, in America, if you know somebody with suicidal tendencies, issues with trading, then you know, consider calling the number up here, 1-800-273-8255, and get help for your friends. Let me check in here on the chat. My hairstyle is like this because I just did not shape it at all today. I had to go pick up my girlfriend who wasn't feeling well with a migraine from work today, and I just really quickly showered, threw my hair back, and somehow here we are. I just haven't bothered with anything, so I haven't even, it's a style for sure, but I just haven't cut it. Anyway, so this is something super important that you guys need to be thinking about. Financial Action Task Force, which is a committee that works globally. They're an international level committee that gives recommendations to various governments and banks around the world as to how to combat money laundering, terrorist financing, etc. And they're getting ready to issue a report June 21st that is going to recommend some serious changes to the way that money transmitters exchanges work with cryptos around the world. It's something followed by over 200 countries, including the US. So the Financial Action Task Force, FATF, has a spokeswoman, Alexandra Wijmenga Daniel, who sent an email about how they're getting ready to launch and announce these new rules. It works with all sorts of things. It has to do with funds. It has to do with exchanges. It has to do with custodians. It really can affect the way that we do business with crypto in a big way in so many areas. Many people are calling it a huge threat, including the director of research at Mizari. The biggest threat, much bigger impact than even those that the SEC has had or any other regulator to date. Kraken is not a fan of this at all. So it basically means that these companies are going to have to require a lot of info on people who transact in over $1,000 or 1,000 euros worth of crypto. They're going to require the sender's information to be relayed, as well as the recipient of that crypto, which is very difficult to do when these exchanges do not know where you're sending the crypto when you move it out. So that means that they could kind of freeze your accounts if you don't provide accurate information as to where you're moving it, because they're required to give that to the FATF and to their governments and all that due to these new regulations. Compliance is looking like it's going to be very costly and technically difficult. This could mean that a lot of funds and exchanges could go under because of the costs they're going to have to incur due to this possibly new announcement that's coming out that they're going to have to abide by. So it's going to either require a complete and fundamental restructuring of blockchain technology. Good luck trying to fork Bitcoin to comply with these new regulations, or it's going to require a global parallel system that's going to be constructed between 200 or so exchanges in the world that work together and really just KYC and whitelist everything. So I think this is a good point that the Kraken's general counsel, Mary Beth Buchanan, had to say. Without enhanced technology systems, this is a case of trying to apply 20th century rules to 21st century technology, as we've seen so many times in the past. There's not a technical solution that would allow us to fully comply. We are working with international exchanges to try to come up with a solution. I think this is another good point. So I get why the FATF wants to do this. Jeff Horowitz, the chief compliant officer at Coinbase, had to say. But applying bank regulations to this industry would drive more people to conduct person-to-person transactions, which would result in less transparency for law enforcement, which is the exact opposite of what they hope to accomplish. The FATF really needs to consider the many unintended consequences of applying this specific rule to VASPs. So, you know, there could be many exchanges blacklisted if they don't comply. The entire ecosystem could be in for quite the shakeup come the end of this month, June 21st. So we'll have to see what happens. I'll be in touch and keeping you guys updated on how that proceeds and whether they delay such a thing, because it seems like it is ridiculous and it will move people away from these exchanges, which is perhaps something we do want to see. We'll move more to decentralized exchanges. So it could be something like what we've seen when you know, torrents came up and sharing of pirated software. You know, people are still going to get what they want. They're going to do their best to get what they want. And if it's done behind closed doors, those in power who are trying to keep a stranglehold on their power are they're going to suffer even more than if they would have just not stifled this kind of innovation and been more welcoming. Instead of trying to get their own short-term gains, they're not thinking long-term. Here is my thought. And obviously they haven't done their research. If they think they can try to figure out who is sending and exactly where it's sending every time from every exchange, that is absolutely ridiculous. So I just wanted to share that with you guys. Thanks for the donation and peace, Node. I appreciate the $2, man. It's nice to get something back. It's the first one since I got back. Yeah, I'm gonna put this up on the main channel later on, but I felt like doing a live stream with you guys because I haven't done it in a while. So here we are. So thank you guys who are subscribed to the Crypto Minute for joining me out here, the good and few of you guys. So Coinbase card is now available in Europe. You know, they phased out the Shift card, and Coinbase now has their own card. It's launched firstly in the UK. Now it's going to be available to customers in Spain, Germany, France, Italy, Ireland, and the Netherlands to spend their crypto anywhere from grocery stores to romantic dates. What is it they say here? To cocktails and dinner dates. It's become the go-to card in their customers' wallets. Well, it's kind of like the only card for the company, so. But I see what you're saying there. To get started, basically you download the app on the iOS or Android store. You sign up for the wait list. I hear in April over 1,000 people got shipped the cards for free. After the wait list closes, your crypto balance in Coinbase will be available for you to spend anywhere, which is really nice actually if you want to have the option of spending crypto and you have a Coinbase account and you know the market's hot and you just want to buy some knickknacks or others on Amazon. Obviously not something that the hodlers are big fans of, but it is what it is. Thanks, Decentralized. What's up, bro? Thank you for that huge donation, bro. Hope you're doing well, man. Let's make it 2. Thanks, bro. I hope everything is good. We haven't caught up in a while. Decentralized is the man, by the way. That guy is an OG as OG. If anybody knows anything, it's this dude. He's a good guy. Thanks, Decentralized. So, you know, this is an interesting little article on abcrypto.com. Bitcoin's returns in 10 years trump Berkshire Hathaway's returns since 1964, which is Warren Buffett's company, which is notoriously famous for having never split the stock price. So the stock price is obscenely high. So, you know, they crunched some numbers out here and, you know, Warren Buffett's a crazy, first of all. He compared Bitcoin to rat poison. He says if Bitcoin doesn't do anything, it just sits there. It's like a seashell or something. And that is not an investment to me. It's a gambling device. There's been a lot of frauds connected with it. There's been disappearances. So there's a lot lost on it. Bitcoin hasn't produced anything, you know, except for financial freedom and borderless money transfers with the first unspent, well, first currency you can't double spend digitally. And has a limited inflation rate. Actually, you know, I guess distribution date, because the total supply we already got locked. There's a lot there, Mr. Warren. But anyway, if you had invested, you know, in 1964, $1,000, you would have over $10 million today if you had gotten that into Berkshire Hathaway stock. But if you had put, and I did my own number here, you had put in, based on what they put here. Okay, so let me rewind. Berkshire Hathaway stocks have gone up 997,900% since Buffett's takeover in 1964. While, you know, in only 10 years, the last 10 years, Bitcoin has gone up 720 million %. So, you know, a lot more, just a lot more. Actually, my numbers might be way off. Let's just say you have a lot more money if you had put money into Bitcoin over the last 10 years rather than put it into Berkshire Hathaway stock. So what's up now, Warren? What's up, Warren? Are you going to try to take over Bitcoin, my man? Like Facebook is apparently going to try to take over Bitcoin. We're going to get into Facebook in just a little bit. We're going to get into it. McAfee. He's such a character these days. Such a character. McAfee, right? Threatening to release a bunch of information, basically whistleblow stuff he's heard from the government if the government continues to come after him for tax evasion. And he has not paid taxes in forever, refuses to pay taxes. In a way, I respect that. I completely get behind that. You know, I remember one individual who didn't want to pay taxes, and he lived and died by that, actually, in prison, and that's Peter Schiff's father, the famous gold guy. Oh, man, we'll see how that goes. But, you know, he's living his truth. Thanks, Elle, my own girlfriend out here in the chat. Oh, YouTube gave you a free super chat? What? That's pretty cool. I don't know. It's funny because they pay themselves like 30% of the transaction, so we get 70%. That's funny. Anyway, so a 20-year-old Bitcoin millionaire, you remember Eric Finman, this guy who started buying Bitcoin when he was 12 years old? Well, he's 20 now, and he's launched a website called Coinbits, which is similar to Acorns. If you don't know Acorns, they invest in stocks for you, really just funds or indexes, really, that are either conservative or aggressive, and they round up your purchases. So let's say what you do is you link your bank account to Acorns, which is going to be very similar to what you do with Coinbits, from my understanding. I haven't tested it. Maybe some of you guys have, and you'll let me know later on what you think about Coinbase. Eric Finman, his new site, he's trying to get a million users in 1 year, which he thinks is reasonable. And I was personally petitioning Acorns to do exactly what Coinbits is doing, because they were already doing it for stocks, which is rounding up your purchases. You go to Starbucks, you have your bank account linked, your card linked to Acorns, then you spent 80 cents on a cookie. It automatically rounds up to the nearest dollar, so it charges you $1 instead when you swipe your card. And that round up, the 20-cent difference between 80 cents and $1, goes to invest in stocks. You know, they have huge fees when it comes to Acorns, $1 per month, which is a lot if you look at certain management fees on other kind of, you know, ETFs or whatever. But that's the convenience they give. They don't have crypto as an option, though, but no more. You'll be able to do it. It looks like with Coinbits. I'm aware there are other companies doing that. Let me know what your guys' experiences are with this kind of thing. But I think it's a great way to slowly invest in crypto and then have extra money invested that you didn't even realize wasn't really affecting you at the end of the month. It's one of the ways that I really enjoyed investing in stocks before I even got into crypto. I'll just have a bunch of money in the basket, and I'll be like, okay, now let me go take it to a proper brokerage and invest it in specific stocks that I want to buy. So it's nice to get that option for crypto. Shout out to Eric Finman for what he's trying to do, or doing actually. We already talked about that. CCN, so cryptocoinnews.com, actually CCN.com. If you weren't aware, they shut down 2 days ago. They said permanently, because Google had an update to their algorithms on June 2nd, and it changed overnight the amount of traffic that CCN was getting, one of the oldest publications for crypto news out there. So overnight, 71% drop, over 90% drop in revenue. They said they were forced to shut down as they just were not getting traffic from Google anymore. And so now it looks like they're back up after just 2 days. Dear readers, thank you so much for your love. It has overwhelmed our amazing team and me this week. We've received hundreds of support emails, Facebook messages, LinkedIn messages, and tweets. We also received all matters of helpful feedback from SEO experts and product experts in Google's Webmasters Forum. While we've been working in the dark trying to get to the bottom of our massive visibility drop on Google, a friendly helper in Google's forum mentioned that CryptoCoinsNews.com, our previous domain, is reappearing in Google searches. That was a massive surprise for us, as I personally requested a domain name change in 2017 from CryptoCoinsNews.com to CCN.com. Since that change, CryptoCoinsNews.com was effectively absent on Google. Now it's back and is inexplicably using recent 2019 articles from CCN.com. This is abrupt and confusing. Whether or not the Google 2019 core update is to blame, we are fixing it. We're receiving help from multiple SEO teams to understand what has transpired. There's still a good chance that this won't correct our visibility on Google overnight, but I'm hopeful that we are on the right path to figuring it out. Enough said, CCN is back. Now people are really talking about this one. They're saying that this is all a PR stunt, right? Pathetic PR trick. Aha, this was just PR. Nice. And at the same time, many people are happy to have CCN back, myself included, because I've enjoyed their articles in the past. And I mean, they were already in my brain. I didn't really need a PR stunt to be aware of who they are, as many of you guys are. But many are saying it's journalistic FUD. Here's Larry Cermak. 2 days ago, Google killed us. It's all their fault. Now, never mind. We fixed it. And Peter McCormick, I suspect the closure of CCN is more than just down to a change in the Google algorithm. If the rollout was June 3rd and this decision was a week later to close down, I assumed they had bigger problems. And dear CCN, stop demonizing Google and stop playing stunts. Being a market leader comes with its own responsibilities. Don't ruin the market for other publishers by making a joke of the crypto community. And some people seem to enjoy the drama. I like a good bit of drama. Anyway, it seems to have worked. So let me know what you guys think. Do you think it was all some PR stunt? Or are you... is that irrelevant? Are you happy to have CCN back? Has the Google June update affected you in any way? I've noticed huge changes in my searches on Google for less quality. I had an issue with an air conditioner that I have here because I couldn't shut it off. Turns out CL doesn't mean child lock. It means cleaning, self-cleaning, cleaning mode. Anyway, I was trying to find out what that meant because I didn't have my manual on me on Google, and I could not find anything. I went to Yahoo, and I found a message board post right along the top that let me solve my issue and figure out what the issue was. And I've noticed this kind of being a recurring thing where my Google searches no longer are valuable because they seem to link to more verified, scientific, unfake websites. Whereas I can't get the average person's message board post to pop up when I search anymore. So I'm tending to go more toward Yahoo. I wonder if that's affected you in any sort of way, but I have a feeling that, you know, CCN wasn't completely just lying here with the issues. But anyhow, I'm happy to have them back up. So Facebook, they're getting ready to announce their white paper in just a few days. I believe that's on June 16th. They're getting ready. No, June 18th. They're going to announce the details of their new cryptocurrency that's going to sell nodes for $10 million a pop. But, you know, there's a decent article. I'll put a link, as I will for all this stuff later on down in the description below on the main channel on crypto, and you will be able to read this for yourselves. But, you know, an interesting point here is that one of the ways they're going to try to gain clout amongst everyone is to pay interest to users, or at the very least, pay interest to node operators, because Facebook has a lot of capital and they are going to be parking it in a partner bank, and they'll be getting interest, something like 2.25% at current rates, until we move to negative interest rates. And we'll see if they charge people to move the stable coin. But anywho, they'll be able to have all this extra money that if Facebook was to keep that money for themselves, it would look really bad. But if they pay it out to users, if they, you know, move running, the operations of this cryptocurrency to an overseas environment that they create or body, it would seem more decentralized, and it would look better in people's eyes. So this is kind of just some of the stuff she goes into here in more detail. I'm gonna try to continue with the news here so it doesn't get too long already. This video is already getting there, so I'll put a link later on if you'd like to check that out. But it's an interesting point. You know, Facebook has come under more controversy. Just now everybody's talking about this because it's come out that Mark Zuckerberg, CEO of Facebook, knew about privacy issues before the Cambridge Analytica scandal. So the price for the Facebook stock today dropped 2% in an instant. Obviously, they don't care about privacy. Obviously, they've been aware that there are issues that applications were leaking your data and getting data they shouldn't have had access to. And so I don't know, would you guys actually trust a cryptocurrency by Facebook? I think it's not even fair, honestly, as many others are saying, that you could even consider that Facebook would try to top Bitcoin or is better than Bitcoin or will be better than Bitcoin, or people will flock to it because it's not at all the same thing. It's a stable coin, although I hear they are in the works for something that's not so stable. First of all, Bitcoin's not a stable coin. Then there's not a limited supply. It's based on dollars. Nobody can run a node openly. You have to pay $10 million to run a node. It's really not even close. It's probably closer to one of these scams you've heard of. But anyway, we'll see what comes of that stuff when they finally release that white paper soon, in just a week. So I've been getting flack, right? Because I got this token, right? It was called Bomb token. It's a really cool token, actually. And somebody gave me a bunch of Bomb tokens, I guess, from the community a few months ago. So I was just browsing through my wallets yesterday, and I noticed the coin was up in just the last month, 14x. I was like, crap, that's a lot. And so I started looking at it, and it's been just such a crazy climb for this token. And I haven't talked about it, but I thought it's such an interesting project when I got it. And I have neglected to mention it on this channel. But as you can see here, it's up, you know, whatever, it doesn't matter, daily, 3.39%. And I am a holder, as I mentioned, fair disclosure, not paid to talk about it, but I felt like talking about it now. The total supply basically changes in such a way that there's 1 million total Bomb tokens. And every time you send a Bomb token, 1% of that transaction gets burned away for all time. So it's just a deflating supply. You can see that the circulating supply has dropped substantially, and the market cap has continued to climb as there's still been demand, right? So it's just been such an interesting project, I would say, because of this new way of not just keeping a stable supply or inflating supply, but what if we deflate supply every single time a transaction is sent? So I've been following it and trying to keep tabs on it. I really like the community. I see that the coin is doing stellar, and I just wanted to share that that is happening, that is one thing that was created as a fun token, similar, I guess, like Dogecoin. It's just meant to be a fun token, but to me it's an interesting, one of the more interesting, simple experiments that has been done with token economics to this day, built over Ethereum. So just a heads up there on that one. And congrats if you're a holder, because you're probably pretty happy. Thank you, Gerald, for the donation, bro. And babe, did you get another $1? Thank you for the donation. Anyway, that's most of the stuff I wish to cover with you guys. Thank you for having me back and for joining me on this channel again after a bit of a time off, but I've been following as closely as ever and will continue to do so you guys can stay on top of things and make the best decisions for yourselves. Always use this as a jumping off point. Don't invest because of anything you hear here. Dig a little bit deeper. There's plenty of great resources out there. News sites like CCN, news.bitcoin.com, CoinDesk. You have great community on Twitter. Be careful who you follow. I try to follow only 100 people that are quality. A good mix of miners and news and developers, so I can get a good overall feel for things. There's sites like coinspectator.com that give you news like to the moment. There are tradingview.com where you can see ideas that people have, various Reddits. Such a great, this channel, what I'm trying to say is just a jumping off point for you guys to then dig a little bit deeper and look at various perspectives on the same subject before you make a decision, usually being a good way to do things. So this is the quote of the day. This was something that I encountered just a few days ago, and I thought it was great. A loaf of bread, this is Thomas Schultz on Twitter, loaf of bread cost in 1915 7 cents. In 2019, $2.89. In 2010, 119 Bitcoin was 119 Bitcoin, right? 2019, that's 0.00037 BTC. You tell me which is a shitcoin. In response to this, a lot of people were saying, you know, I don't know where you're paying almost like less than $3 for bread. I'm paying like $5 out here in Europe, or €5. That's even more of a case, especially as Trump is calling for more inflation because we have a strong dollar, which weakens our position in international trade. But, you know, we don't have to play those games. We don't have to play the political game. We have an out. It's called Bitcoin. And so I'll be here with you guys. I hope you'll be here. I want to thank you so much for making it out. Let me see, Tech Boy, thanks for the donation, man. What's your prediction after LTC halving? That's a good question, man. Well, for me personally, this is how I'm playing it. I expect it'll run Litecoin probably into the halving, probably within a day after the halving, we'll have a sell-off in Litecoin because people are expecting Litecoin to moon after the halving. But those are only the noobs, right? Because we know it will moon eventually, but there's going to be a sell-off from the speculators who wanted a quick jump, but they don't get it because people are impatient. So anyway, I expect a sell-off shortly afterwards, or to stay flat. I'll be happy to take some sort of profits around the halving, either before or after. I expect it to continue to move up. Then afterwards, I think Bitcoin is going to be a huge play. I think it's going to be leading the alts like we saw recently. I mean, all the way from Bitcoin at 3,200, where Bitcoin has these huge moves nobody expected. Altcoins look like crap. People sell their altcoins eventually for Bitcoin, and then the altcoins run, and then people lose a lot of money. So I think Bitcoin is going to be a major play. You want to definitely be in Bitcoin before the moves, and I think it's going to be beyond what people expect Bitcoin percentage-wise to move up, and then the altcoins will rally, and then we'll have alt-saison, as it were, afterwards. So that's how I'm doing it. Those are the big targets. Like I said, EOS, Chainlink were recent ones, performed really well. I know the market did overall, but those were some of the strongest names. I think Maker, towards the end of the year, they're going to be launching their multi-collateral deposits and CDPs. That could be a big mover as well. Also a limited number of coins for that project. I think that's going to be a huge one. I like what the project is doing. So for now, that's pretty much where I'm sitting. And I think let's just be in Bitcoin by the halving. And usually it takes a few months before the halving's actual supply drop affects things in a more fundamental price increase. So it's just a long-term game here. And then we have another 4 years before the next one. And surely we'll have a huge pump and then dump in between that could wreck a lot of people. So let's stay informed. Let's keep our funds off of exchanges, in our hardware wallets, cold storage, whatever it were. And I think we'll be happier for it. Be very careful with any malware on your computer when accessing your crypto. Be smart and vigilant. Don't be sharing data easily with anyone. You should really question anytime anybody wants data from you, especially if it's related to your crypto. And if, you know, for somehow you're private, you haven't told people you're into crypto, all the better for you. I'll just say that. You're going to have less people coming after you. You're going to have, just going to be a little bit safer. So protect yourselves. I think it's important, especially in these early days, because people will be knocking at your door for whatever reason as they realize you have crypto, especially as we move forward here. So take care, much love, and stay cryptic. Peace.